Ella Gurfinkel here, Senior Loan Officer with Team Ella at Fairway Independent Mortgage. And my guest today is the amazing Tina Colson with 1031 Exchange. And as you can glean from the name, 1031 Exchange is what we're talking about today. So, really, I think the biggest question everybody has if they have rental property that they're about to sell is what is a 1031 exchange and why do I need to even think about it, worry about it, or be concerned with it?
Absolutely. So thank you, Ella. Thank you so much. And as far as the 1031 exchange, it was actually created back in 1921, and it's an IRS process that allows anybody who is selling investment real estate to purchase additional investment real estate and simply defer the tax from the relinquished property to that new replacement property. So your tax is going to roll from one to the next, and the goal is to keep exchanging to grow your portfolio. So in essence, the reason why you would use it is one, to grow your portfolio, but secondly, it's just a great long-term strategy for building that wealth plan. And we're in essence giving you more capital to work with. So instead of paying the tax upon the sale, you've got more money in your pocket to purchase that next property.
So I guess that brings up the question, or really the question should be maybe, is why would I do that? Because if I just sell, I can pocket, if I sell my rental, I can just pocket the money, right?
So you don't want to pocket the money. You actually want to go through a 1031 exchange intermediary. Qualified intermediary is what we do here at Equity Advantage, and we're your legal money holder. So our role is to hold the money so the IRS cannot tax you upon that sale. Also, we're going to prepare the legal documents and ensure that all of those codes are met as you're going through this process. I would say that one of the biggest things that we could tell all of our clients or soon to be clients is do not sell a property that is an investment property without having an exchange set up for closing. So it's all about preparing yourself, whether you are purchasing on the other side first and doing a reverse exchange or a delayed exchange where you sell first and then purchase later. Again, I cannot stress enough, it is so important to have that paperwork in place before you close on any property if you want to defer that tax. I cannot tell you how many times that we've talked to somebody where they call in and they're like, oh, hey, I sold my property 2 weeks ago, and I understand I have 180 days to purchase my new replacement property and still defer that tax. Right. The big red circle comes up and we go, no, that doesn't work. We definitely need you to move across, have your intermediary in place first and foremost before you sell. Otherwise, it's way too late.
So when we talk about the need for the 1031, when we start working with a client who's looking at selling an investment property, just I know you're not a tax person, and neither am I, so I know I'm not allowed legally to give tax advice. I know enough to be dangerous, but again, that's from a legal standpoint, that's not the advice that I can impart. But as a rule of thumb, if somebody were to bypass or forego a 1031 and just basically sell their rental, or even a second home for that matter, what are the tax implications they could be looking at? Because we're not only talking about the Fed, we're also
Right.
talking about state taxes on top of it. So, as a rule of thumb, what could somebody be looking at so that the light bulb does go off at some point? It's like, wait, that's why I need the 1031.
Yeah, absolutely. That's a great question. And so what you are looking at when you sell a property is anytime it's an investment property, you've got the federal, which is 15 or 20%. You're also going to have your state tax. For many of us, we have a state tax upon sale. Oregon is 9.9. If you live in California, 13.3, right? So they can get you on that end. Yeah. And then also, depending on where your income bracket lands, you may have a 3.8% Obamacare put that tax into place. So it's Medicare plan basically. And then on top of that, depreciation recapture. So this this is where IRS gets us, because that depreciation recapture is taken at 25%, whether you took
Holy crap.
depreciation or not on an investment property. IRS is going to look at it as you did take depreciation. So when we're
So
talking to
hold on.
clients, yeah,
Hold that thought for a minute. So
hold on.
let's take our well, my husband's technically rental property, and what you're saying is that for every year we've been renting it and writing off depreciation, which is what, a 25-year straight line depreciation, it
So
would add up for all the
27.5,
years.
yeah. Mm-hmm.
So for all the years that we've been renting it out, we have to add that depreciation from all the tax returns and get taxed on that as well on sale.
At 25%, yes. So they will do that
Holy
depreciation
smokes.
recapture at 25%. So that is where a lot of people get caught, because we're not always looking at that piece of it. We're saying, oh, well, we've got federal at, 15 or 20%, no big deal. It's all of these taxes that are added together that really gets us. So when you're doing an exchange, we're going to basically defer all of that tax to the new property. Again, we're rolling it over. It doesn't go away, but there are some strategies for exit strategies at the end of the 1031 process as you get to the retirement age that we can always look at too. But on average, I would say 35 to 40% is what somebody is going to pay out of pocket on that gain amount at the end of the day.
Sorry,
So it
mind
adds up.
boggled.
It adds up fast.
Holy smokes, because you can, again,
Yeah.
looking at our specific instance, and that's actually how you and I got to talking originally. If we have basically a condo that was bought almost, 30 years ago, it's almost paid off.
Right.
So
Right. So
now
you've
we're
got a lot of,
looking at a tax implication from hell, effectively, if
yeah.
we were just to sell it outright and not really work through a 1031.
Exactly. And, the other thing too, Ella, many people think 1031 exchange is just for maybe a single family residence or a commercial property is typically where that thought goes. But it's for single family, multifamily, commercial property. Even if you had a vacant piece of land that you've been sitting on for over a year and that was held for an investment, you decided to sell that land, you could always exchange into a single family, multifamily, commercial property. So it's, they generally say like kind for like kind. It's really the nature of the investment, not the investment itself. So there's a lot of flexibility there. And then somebody could also go into like a passive investment. Maybe they want a Delaware statutory trust where they're just receiving a check in the mail every month and a tax statement at the end of the year. Your money is not always liquid that way, but it's a great exit strategy for somebody who's looking to retire out of those rental properties and move forward into something else.
See, right there, just that info alone, I think is like $1 million advice right there.
Yeah,
Because
it's very
again, most
helpful.
people don't realize that it's not just, again, like you said, it's not just commercial, but it's like to like purpose more
Mm-hmm.
so than the like to like property. Because back in the day, from what I understand, and this could be complete misinformation, it used to
Mm-hmm.
be more like to like properties, where
Mm-hmm.
not anymore.
Yeah. And you see different things out there. So there was a time also before the Tax Cuts and Jobs Act that people could exchange personal property. So maybe it was high-end artwork or collectibles in any form that's going to have gain upon the sale of that item. That rule is also going to sunset come 2025. So we're excited to say, okay, well, are they going to bring back personal property? In that particular case, as an example, we may have had a farm that somebody was selling, and we can allocate funds too between the personal property and the investment side. So if you've got, as an example, a farmland where somebody's living in the farmhouse, we can allocate that toward the 121 tax code, giving them an exclusion of gain up to 250,000 for an individual, 500,000 for a married couple filing jointly. Then we take the working farmland and we can take that 1031 exchange, and whatever that fund is allocated toward, they could go purchase more investment property on the other side. In the scenario of the personal property piece, they may have had farm equipment. Maybe they sold cattle. There were bulls. And in that instance, you could sell bulls for bulls and exchange them in that category.
Wow.
So that may be
Wow.
coming back into play. So anytime that you have got somebody that has both a primary residence and working farmland, we can work with all of it. And so it's partial investment and it's partial primary.
Why is it that every time I speak with you, there is always not just a nugget, you're like raining nuggets of knowledge on me every single time. I've learned so
We love
much.
that education. We love the education. Yeah. And I think that
Oh,
that's
hell
it.
yes.
Is all of these conversations, it just brings out one more piece of what we can do. It's not an all or nothing. And the other thing too, to be, fully tax deferred in exchange, if you were selling an investment property for 500,000, you would want to purchase another investment property for $500,000, and you would want to use 100% of the proceeds that come from the sale toward that new investment. However, if you go down in value, you sell for 500,000 and you purchase for 400,000, you can still do an exchange. You're simply paying tax on the difference of that $100,000 that you've gone down in value. The other part is you can pull cash out of the transaction when you sell. You would have tax on just the portion you pull out. So again, it's not an all or nothing. There is a lot of variables that we can bring to the table. And our goal, anytime somebody calls here, we're just like, okay, well, what do you have now? And how do we get you to the other side? What is your goal? What is your goal long-term as well as short-term? And we can connect those dots and make sure that you're within the parameters, and then always working with you, right? The lender side of things. We want to make sure that we're in contact with you and we've got all of our paperwork in place and that conversation is going smoothly. So we know how much we're bringing to the table and how much of a loan they need on the other side. So it all works hand in hand. We're teamwork.
Absolutely. I mean, speaking of which, my favorite example of the amount of misinformation out there about the 1031s, and it's probably one of my favorite topics, is the myths, misconceptions, and misinformation, right? Pretty much on any subject, because while I tell people, Google is your friend, not everything you Google is always correct or up to date. So that being case in point, you and I got to work together on one of my clients' exchanges where I was about 2 weeks into the purchase loan with my guy, and he was buying a rental in Oregon for effectively his parents to live in and pay him rent on it. And at the same time, he was also selling his rental in California. And like I said, we're about 2 weeks in on the purchase, and he brings up the sale in Cali, and I'm like, wait, 1031, have you considered it? Because I'm looking at the net proceeds, the estimated net proceeds. It's a chunk of a money. And I'm like, wait, dude, you're going to be paying taxes on that. He's like, oh, no, I'm going to do 1031 after I close. No, no. We scurried and I put him in touch with Tina, and Tina came to the rescue, and we were able to effectively divert the sale in California into the 1031, make it part of the process, and loop in the purchase in Oregon into the 1031, so that the tax savings alone were pretty dang significant. So that
Absolutely.
just
And
goes to say that, the timing has to be absolutely right. And
yeah.
that's my whole point. I make a point of listening, I guess, to what my clients are saying and what their bigger goals are. But sometimes I end up catching stuff mid-flight as a lender. It's like, wait, we need to bring in additional professionals, and that's where you come in.
Absolutely. And, a lot of people too, and you mentioned this at the beginning, is second homes. And so I think about your side of it as a lender, and you're working with somebody who is purchasing a property without asking those questions of, are you in a 1031 exchange? What is this property going to be for you? I think a lot of folks go, oh, well, I'm going to purchase this and just say it's a primary residence, where it's really not. It's an investment property. However, second homes do apply. And so a lot of people may decide, I'm going to sell this other rental property over here that's a long-term rental. I'm going to purchase a second home. They get to use it part-time, right? So they get the benefit of that short-term use for the first 2 years, 14 days, per year for the first 2 years, or 10% of the time it's rented out. That's free time for them. Enjoy the property, rent it, Airbnb, and they're in a great position. But that affects you on the loan side as well, depending on what type of product you're going to put them into. So all of these conversations come into play. And I know a lot of people ask me on our client side, well, if I need to get a loan, who do I go to? What type of loan do I need? And so you are the key player there. And we appreciate you and everything that you do too, because we've got to work hand in hand on these deals.
Exactly, and thank you again for the kind words also.
Yeah.
But it's the amount of missing, I guess, information, or it's what the clients don't know. And the only reason I'm bringing it up multiple times throughout multiple videos, throughout multiple posts, is that if you need, first of all, talk to us about early in the game about what your plans are. First of all, because then we can save you literally thousands, if not tens of thousands of dollars on federal and state income taxes, capital gain taxes by plugging in the 1031 piece. Because again, if you're selling a rental or a second home, you can transition that money from that to another something or other, or a future investment. And like I said, in the process, saving a lot of money on taxes, because if you miss that boat, if you miss the window for the 1031 exchange, yes, you will have to pay taxes. So let that sink in, I guess, for a minute, because if you do things backwards, just out of not knowing how the process goes, unfortunately, that does not excuse you from being liable for technically tens of thousands of dollars. I mean, obviously depends on the value of the transaction, et cetera. But again, you're talking a lot of money that will go to the federal taxes and the state taxes, depending on the state you're in, just based on, like I said, the lack of information up front. So definitely tell us when a situation like this is even possible, or you're thinking of it, so we can get started on it ahead of time and bring the professionals in, such as Tina, who will help you structure the best way to tax shelter your funds instead of, again, just writing big checks for taxes. So that's really probably the biggest reason for this conversation today, is how do you shelter as much money as you can from the tax liability. The one thing that I've learned from talking to Tina over the last few years is what Tina has mentioned just a few minutes earlier. It's not just the investment properties that can go into the 1031, it's also the second homes,
Correct.
right?
Partial farmland along with primary. You just exclude the primary, take the farmland or the business, a shop, an ADU. All of it can apply to the 1031 process.
And see, there you go again. I just learned more new stuff. So that's, that's pretty significant. What about, so I've always been under the impression, and again, some of it comes from, Googling and surfing the net, just like anybody else out there. I'm human. I do that too. And yes, I do self-diagnose myself without WebMD. I mean, come on, don't we all?
Don't do it, Ella. Don't do it.
Right? I was also always under the impression that you could only 1031 going forward, meaning sell go through the 1031 period, obviously abide by the timelines, and then buy within that time frame. Now, we're going to address the time frames in a sec, but there are other ways of doing that, right?
Yes. Yes. So if you find the perfect property out there and maybe your investment property that you're looking to sell is not quite ready to go on the market, you can always do a reverse exchange where you purchase first and you sell later. And again, back to those timelines, regardless of the type of exchange that you do, you only have 180 days to finalize your exchange, meaning sell a property and purchase a property within that 180-day window. And that window starts upon the first property closing date, whether it's that purchase property or the relinquished property. Again, that closing date is what's going to start your timeline. And then, of course, you've got the first 45 days of that 180-day window as your identification period. And so that just means you're either out shopping for a new property if you've already sold your relinquished property and you identify the property that you want to purchase in the exchange within that 45-day window. Or if you purchase first, you have 45 days to tell us the property address of the property you're going to be selling in the exchange. And so we manage all of our paperwork accordingly. But I know that whether it's a reverse exchange or delayed exchange, that's also going to affect you, Ella, on the loan side, because we're not a lender. We need your loan services to complete that loan on the purchase side if somebody is getting that funding. So that makes a big difference too. And what we do on our end, not to get into too much nitty gritty on this because I could talk for hours, but on a reverse exchange, we always set up an LLC on our end. So it's either we're going to put that new property into the LLC or we will deed your relinquished property into the LLC. And that all is determined on your equity that you're getting back versus how much of a loan do you need on the other side and the amount of deposit you're putting in on that new purchase. So we work through all of those numbers with our clients.
Of course, and I totally understand, of course, that not everybody has the capacity financially or the opportunity to actually buy an investment property first with their own money for down payment to then get paid back out of the 1031 exchange on the delayed or reverse 1031. But the reason I bring it up is it is beyond important to know that it's an option because I'll use myself as an example here. When Tina and I were originally talking about the 1031s, the market was beyond hot. It was hopping, meaning you could not really identify. If I were to sell, for example, that 45 window to identify the potential replacement properties, there was not enough. I mean, that 45-day in identifying properties really was not happening in my book because the properties were selling like hotcakes. So I could identify them, but I couldn't really close on them because they were flying off like hotcakes. So the delayed piece would have been a lifesaver because then I could take the time needed to sell, or sorry, then I could find something that worked and then sell later because it's easier to buy than and sell than to sell and then be under the gun as far as I was concerned for 45 days. So that was a huge, 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 huge piece of understanding for me. Again, as the markets heat up, as we do see, well, we still see little to no inventory in many places. So again, a forward exchange, awesome financial tool, awesome tax shelter tool. But with the lack of inventory, it is so hard to identify those potential replacement properties and not have them sell from under you effectively. That
Right.
reverse can become your backup to shelter your tax money or you shelter your proceeds from pretty major tax implications.
Correct. Yeah. And something else too, if you end up purchasing or at least going under contract on that new replacement property, try to extend the closing date to the point where you can get your other property on the market and hopefully sold and closed before you have to close on that new replacement property. We can always switch that exchange midway if your closing dates align, and that is going to save you money. It's going to save you headache and get you going in the right direction. So there's still flexibility in there, even if you do find that perfect piece of real estate that you have to have and your property is not closed yet. So there's some flexibility there. And the other thing too that I wanted to mention is we also do what's called an improvement exchange. So there's a lot of exchange companies out there. They may do the delayed simple exchange. They may do a reverse exchange. Not all companies will do the improvement exchange, which means that you're coming in, you've already closed on your relinquished property, you've sold it, closed it, we're holding the money, you find another property that is maybe less in value, and we still have some proceeds in our bank account left over. Maybe it's 100,000. If that property that is being purchased needs capital improvements, we can do what's called that improvement exchange and use your proceeds for the improvements. And again, the tricky part is it all has to fall within that 180-day window. But as long as you've got the timeline in there, it makes a lot of sense. And so we see a lot of these improvement exchanges come through. And then we also see maybe a blended exchange. If somebody has two properties that they're selling to buy one large property and they're going up in doors, up in value, we can do a blended exchange and maybe close on one of their relinquished property sales first, close on their new property in the middle, and then they also close on that second relinquished property after the fact. And so we can make all of this work. Again, it all comes down to that pre-planning and what do you have and where do you want to go with it? We'll help connect those dots with your help, of course, too, on the lending side.
That is awesome to know because, again, every point we've touched so far, you've dropped, like I said, nuggets of knowledge, and I feel like mic drop. I mean, this interview could be just as well over right now. I mean,
Done.
you've already
Yes.
shared you've already shared so much amazing information. Now, something else that I've learned in talking to you is that just like you said, now you can sell two properties and effectively invest into something, bigger, better, more expensive, more doors, what have you. But then you can also do that with a sale and basically split the proceeds into multiple
Yeah.
properties. That was
Yeah.
also an interesting eye opener for me personally because to me, I would look at it as splitting the risk because instead of having a one rental, I can now have two rentals. So if one becomes vacant at any point in time, my money is still working for me in the second one that is in fact occupied.
Yeah, that is true. And something that we see frequently, especially in this market where commercial property, they're having their challenges and trying to get everybody back in these office buildings. We have clients that we talk to frequently that are selling out of a larger commercial property and they are purchasing multiple single family or smaller multifamily homes for rental. And so it all depends. You could sell or purchase as many properties as you want in an exchange. It all falls under that timeline that we're talking about. And so, again, you could go into a lot of detail on that side and what could happen within the 45-day identification window. We could go on for days, but it's again that timing, where they're at on the sales side, where they're at on the purchase side, and how we bring that all together. But that blended exchange is a great way to make sure that we're encompassing all properties within the given timelines that we have.
So again, there is the depth of information you can get from talking to Tina is has no limit. It literally has absolutely no limit. But again, at the bottom line of the conversation at, I guess, God, I can't talk today. I guess the real the real point to the conversation is that if you own an investment piece of real estate or semi-investment where it's a second home, or like Tina said, a working farm where, part of it is residence, part of it is actually income producing, those are all properties that you really would want to talk to a 1031 professional, i.e. Tina, absolutely Tina, like bar none, hands down, the whole nine yards, before you actually consider selling, because the tax savings alone are well worth it. And the solutions that may come out are beyond worth it as well. So, really, if you do own investment properties, 1031 should be top of your list, or 1031 professionals should be top of your list to call before you even, I guess, put the property on the market, because you can pre-plan everything to the T and have a path forward and maybe have solutions you didn't even realize you had, having your proceeds sheltered from taxes at the same time. So again, 1031 is an incredible tool. And by the way, one of the questions I get asked, it's like, well, my property is in blah blah state, or I'm selling in the Pacific Northwest, but I'm going to buy, let's say, in the Carolinas, or in Georgia, or in Florida, or Arizona, whatever the case may be. Can I still do a 1031?
Absolutely. And so our company, we work nationwide. So as long as you are selling or purchasing in the United States, you can sell in one state, go to another. The only other territories that are included in that U.S. is the Virgin Islands, Guam, and Mariana Islands. We get a lot of questions about Puerto Rico. Nope. Can't do Puerto Rico, unfortunately, but anything in the U.S., including those three territories, and or foreign to foreign. So a lot of people, we may get a call from Germany and they're saying, hey, I'm selling in Germany. I want to purchase another property in Germany. We can certainly do that. I would say that it's rare that we take care of foreign to foreign investment because there's a lot more hoops involved in cost. But as long as you're in the U.S., it's going to be reasonable. You can go in as many states as you want, and we'll take care of you there too. But you just cannot cross over. Another example is maybe somebody is selling out of Oregon and they want to purchase a property in Mexico. We can't do that because you cannot cross over from US to foreign property or vice versa. Right?
Actually,
We have a lot of
totally,
business
because
if you purchase property in Mexico.
oh my gosh, I mean, I've got two people I'm talking to who are actually buying either a second slash investment property in Mexico, or just point blank moving to Mexico for retirement. So it's a thing. It's a trend.
It is. And we used to see a lot of Hawaii as well, and we still
Hmm.
do see Hawaii, but I would say that the price point in Hawaii is a deterrent for some people to purchase over in that area. But it's beautiful nonetheless. But yeah, we see a lot of exchanges, people moving across the state all the time.
I mean, at the heart of it, 1031 is a federal tax code. So
Yes.
it's,
Yeah.
as long as it's in the US, like you said, it's there you have it.
Fair
But
game.
again,
Yes.
it's totally fair game.
And a lot of, I would say the other one that we see is the Canadian citizens. So a lot of Canadian citizens may be, having property here in the US, and they can certainly qualify for that. There's just some other tax codes that we look at when that occurs, when you've got somebody that is not a citizen purchasing here. But it is all doable. We love the word problems, math problems, bring it. Let's figure out what you have and where you want to go. And that is always the fun part of the challenge is connecting those dots, like I said.
I think you and I both thrive on putting the puzzle pieces together, as I refer to it. And the more
Yes.
pieces the puzzle has, or the more complicated the puzzle is, the more kicks we get
Right.
out of it. I don't know if it makes
Yes.
us sick or just we love what we do. I know I do.
Right.
But,
I
the sick factor is still not outruled.
It's so true. And I laugh and I say this frequently when I'm doing presentations too, is, it dawned on me a couple years ago. When I was a kid, I could not stand story math problems. I was like, no, my brain blocks it out. And in today's world, so a couple years ago, I was sitting at my desk and I was all excited because I had helped connect this client in the right direction. And I hung up the phone and I was energized. And then it dawned on me, oh my goodness, I love story problems. What happened to me and when did this occur?
I actually have an answer to that one. Believe it or not, I can explain that one because just like
I'm
you,
ready.
I
Psychology.
absolutely freaking hated with a passion the word or the story problems where something is flying from somewhere and somebody else is flying in a different direction or whatever the case may be, where people are filling up their pools and then their neighbor is also filling up the pool and who's going to do it faster, right? But
Right, right.
I I finally put a finger on it and figured out because same thing, my clients tell me their story, and in the story lies the problem, and I find the solution. When the problems are purely theoretical,
Hmm.
I don't want to deal with them. My brain just blocks them, like you said, because like
Yeah.
why? Why do I need that? What's the relevance?
Right.
It has no real world implication, so bye bye. But when it's real world problems, real clients and their financial well being at the center of it,
Yes.
I'm going to go all out to figure the solution to that particular problem and make it all work.
And this is why we work so well together, Ella.
Oh, hell yes. And then some.
I
So,
love it.
to con- same here. So, to conclude it, 1031 is not the beast to be afraid of. And like I said, not all of the information on the interwebs is necessarily the most up to date or the most true. So here is a real life, experienced professional who's an expert in her field and who will find an answer to your problems. So if you have a 1031 that you may have not even considered because you own rental property or a second home or a working farm, and I'm sure we can, or an ADU in your home, then you absolutely, when thinking about selling that piece of property or multiple pieces of property, then absolutely 1031 and Tina should be the first conversation to have to map out the process and figure out what is the best solution to shelter as much of your hard earned money from the huge, huge, huge tax burden.
Yes.
So,
Thank you.
again,
Yes.
highly recommend.
And I appreciate that. And anytime, call me, let's talk through the scenario. Sometimes, most of the time it works. There are times where it may not make sense to do a 1031, but that is where, I'm not afraid to say, you know what? Talk with your tax and legal people. And if it fits, great. If it doesn't, I will be the first one to say, hey, it doesn't make sense. You're better off just selling your property, pay your tax, and do with it what you want to do with it on the other money side. But again, we can't give tax or legal advice, but we can certainly help steer you in the right direction. So that's what I love to do. And I appreciate just being here with you today. This has been fun. And always
It
look
always
forward to
is
the
fun.
next.
I learn a ton from you. Every single time I talk to you, I learn a ton. So bring it, girlfriend.
All right. I'm coming to Arizona soon, Ella.
Like I said, bring it.